When it comes to the market, there's a mix of good and bad news, and depending on your perspective, you could be in for either substantial gains or losses. The idea of a reverse market crash, where prices unexpectedly surge, creating opportunities for wealth building, is explored in this discussion. The speaker refers to historical instances like the aftermath of the dot-com bubble, the 2008 mortgage crisis, and the market trends in 2020 as examples of reverse crashes. The speaker emphasizes a concerning trend, the shrinking middle class in the United States. They highlight a chart showing a nearly 50% reduction in middle-class wealth while upper-income wealth increased by almost 30%. Additionally, the median household wealth has struggled to recover since the 2008 financial crisis. The middle class's percentage of the total population has declined from 61% in 1971 to 50% in 2021. A recent report reveals that the average wealth of the middle 40% dropped by 7% or $27,000 since March of the previous year, marking one of the largest drops since 2008. The speaker attributes this wealth disparity to the fact that wealthier individuals can save and invest when interest rates are low or inflation is high, leading to the appreciation of their assets. The top 1% ends up making twice as much as the rest of the world. This sets the stage for the discussion on reverse market crashes and the potential opportunities they present. The speaker draws parallels with historical examples of reverse market crashes, such as Germany in 1914, Zimbabwe, Argentina, Turkey, Iran, and Venezuela. They illustrate how economic mismanagement, political exploitation, excessive money printing, and high inflation led to soaring stock prices in these countries, despite the loss of value in their currencies. The discussion delves into the possibility of a reverse market crash in the United States, raising concerns about the country's economic conditions. The speaker introduces the concept of nominal and real rates of inflation, highlighting that periods of negative interest rates have historically preceded economic catastrophes in other nations. They connect the dots between high inflation, money printing, government intervention, and a loss of confidence in the economy as common factors in reverse crashes. To assess the situation in the U.S., the speaker considers the shrinking middle class, interpreting conflicting views on whether it's disappearing or simply moving into higher income groups. The speaker presents data suggesting that, when accounting for government programs and assistance, the middle class may not be as severely affected as it appears. They caution against a simplistic interpretation of the data, pointing out nuances in income distribution over the years. The speaker provides a comparative analysis of reverse market crashes in other countries, emphasizing that apparent stock market gains can be deceptive when considered in terms of purchasing power. While stock markets may surge, the loss of value in the local currency can negate those gains when converted to US dollars. The discussion includes examples from Germany, Zimbabwe, Argentina, Turkey, Venezuela, and Iran. Despite acknowledging challenges in the U.S., such as a high national debt, political divisions, and inflation, the speaker remains cautious about drawing direct comparisons to countries experiencing extreme economic hardships. They argue that the U.S. has fundamental differences, including a consistent GDP over the last 50 years and the status of holding the world's reserve currency. The speaker concludes with practical advice for individuals to navigate uncertain economic times. They stress the importance of saving more than spending, investing in a diversified portfolio for the long term, avoiding panic selling, and focusing on factors within one's control, such as job skills and employability. The discussion encourages a level-headed approach to financial decisions. Feel free to leave a comment above and share your thoughts on the discussion. How do you perceive the current economic situation, and what steps are you taking to secure your financial future? In conclusion, the discussion provides insights into the concept of reverse market crashes, the shrinking middle class in the U.S., and historical examples of economic challenges in other countries. It encourages a thoughtful approach to personal finance and investment decisions. Disclaimer: the content provided is for informational purposes only and does not constitute financial advice. Individuals should conduct their own research and consult with financial professionals before making any investment decisions.